Director of Communications here at the Heartland Institute, and I want to welcome you here. We appreciate the time you spent tonight to learn more about tax policy. Let me tell you a little bit about Heartland. I see a few new faces here. The Heartland Institute was founded in 1984. Among our founding board members is Jim Johnston, sitting here at the table right here in the center. In Chicago by a group of individuals led by our founder, David Padden, and they met regularly to discuss the value of free markets and individual liberty, and the need to promote those ideas to the general public and to state and local legislators and, of course, members of Congress, but not from Washington, D.C., but from here in the Midwest, in the heartland of America, thus our name. We're a think tank. We're a nonprofit 501c3 educational organization. We're in the ideas business, and our mission is to discover, develop, and promote free market solutions to social and economic problems in our nation today and all through our existence since 1984. And much of the economic problems in our nation today have to do with our insane tax laws. You might have noticed in the news today that President Trump sent out his tax policy guys to brief the press about his plan to radically reform the tax code. I think his ideas are sure to encourage economic growth and make tax day a little less onerous for all of us. It's certainly in my memory. It wasn't too long ago. But you don't have to take my word for it. You can hear what our guest tonight has to say, and that really the timing could not be better for him to have been scheduled to be here with us tonight in the Andrew Breitbart Freedom Center. If you like what you see tonight, and I hope you do, and expect that you will, whether here live or watching the live stream that we have on Facebook and YouTube, I encourage you to check out heartland.org for more information about the organization and more about what we do. You can check out our blog, Freedom Pub, which is at blog.heartland.org, where we have several updates every day on the news of the day and op-eds that we've published in other publications around the country. You can check out our daily podcast on iTunes. I just did a podcast a couple hours ago with our guest tonight. It was very energetic, as they often are, especially with this speaker, and I'm sure you're going to like that as well. And we have it every day. So there's a great policy discussion every day at the Heartland Daily Podcast, which you can get for free on iTunes. And we're, fingers crossed, we're on schedule for 2 million downloads this year, which is something we're very proud of. And also check out our YouTube page where you'll be able to see this presentation. And if you've missed any of the presentations we have here in the Andrew Breitbart Freedom Center, Heartland Tube on YouTube. You can see all the presentations there in high-definition video. And if you have a smart TV, I've done this at home, it's kind of fun. You can watch them on your big screen. It's kind of neat. And I think you're going to see a lot that's to your liking. And if you do, and if advancing freedom is important to you, and you're not yet a supporter of the Heartland Institute, I hope you will become one. Fighting for freedom, fighting for liberty, and we're a nonprofit organization, and we depend upon the support of the people in this room, the people watching online, and thousands of people across the country that believe in free markets, believe in liberty. I think is important enough to support its advancement through an organization like the Heartland Institute. There's information on your tables where you can learn more about that, and just talk to anybody here at Heartland. We'd be happy to talk to you about what we do and how you might be able to help us, either financially or just through your own energy and work to advance free markets and liberty. And with that, I am very happy to bring up our guest speaker for tonight. His name is Dan Pilla. And for 3 decades, Dan has been the nation's leader in taxpayers' rights defense and IRS abuse prevention and cure. He's a tax litigation consultant and author of 14 books. He's regarded as one of the country's premier experts in IRS procedures. He has helped countless thousands of citizens solve personal and business tax problems they thought might never be solved. Dan's work is regularly featured on radio and television and the Heartland Daily Podcast, and major newspapers and television shows all across, national publications and television shows that you can see on cable. The Wall Street Journal ranked Dan's book, The IRS Problem Solver, as the #1 tax book in America. And the Associated Press once commented that, quote, Dan Pilla probably knows more about the IRS than the commissioner. He's also the author of Heartland's sold-out booklet, but a new one is coming out called The 10 Principles of Tax Policy. He's a smart guy, he's an energetic guy, he's an entertaining guy, and I'm happy to call him a friend of the Heartland Institute. Ladies and gentlemen, please welcome to the stage, Dan Pilla.
Thank you, Jim. Thank you very much. Thank you. It's great to be back here at Heartland. As Jim said, I consider myself a friend of Heartland and a personal friend of Jim and Diane and Joe, and I'm very, very pleased to be associated with Heartland and working with Heartland. And it's probably been 20 years, hasn't it, Diane, that we've worked together at one level or another. And so I'm very, very proud of that affiliation. As Jim said, the last major piece of work that I did with Heartland was the 10 Principles of Federal Tax Policy, which we have disseminated across the country, and I've just rewritten it now, and we're going to re-release that thing, and so that's good. In December, I wrote a paper called President Trump's Tax Plan, and Diane grabbed onto that, and Heartland released it in February, and we had a discussion in January about coming to Heartland and talking about what could happen with President Trump's tax plan. Of course, we don't know what the final numbers are going to be. We never know that until it's done. And so we picked this date almost by throwing a dart at the calendar. You know, when are you free? When are we available? And we went back and forth, and we picked this date, and lo and behold, this is the day that Trump's people in the Treasury went over to Congress and pitched the tax plan. So we got some definitive ideas here on what's going to happen, what could happen. I can't say what's going to happen, what could happen. But I want to set the stage here. I want to give us just a little bit of background before we get into the really the boring aspects of the dollars and cents and the various percentages of the plan. Nobody wants to listen to that sort of thing certainly for the 3.5 hours I have planned here tonight. we don't want to be going through all of that. They're going to run out of wine much sooner than I get done with that. So we're not going to get into that. But I do want to set the background about tax reform for just a second and talk just conceptually about tax reform for just a couple of minutes. Jim, in his introduction, mentioned the idea of the Trump plan constituting radical tax reform. Well, I'm going to take issue with that in just a minute. But I want to start out with some background on this concept of tax reform to begin with. Tax reform in the United States, and when I use the phrase tax reform in the verb sense, the action sense, has never been a problem. Congress has never been strapped for tax reform ideas. And just to give you some background here, in the 1980s, the decade of the 1980s, there were over 100 different changes to the Internal Revenue Code, 100 different tax reform projects that were implemented over that 10-year period of time. In 1986 alone, the massive Tax Reform Act of 1986 changed over 2,000 Internal Revenue Code sections and subsections. In the decade of the 1990s, there were 4 major tax acts that were passed just between the years 1998, 1996, 97, and 98. 4 major tax laws passed in just those 3 years, 4 years, whatever it was, and that changed more than 750 code sections and subsections. But Congress was just getting warmed up, friends. They were just finding their groove by the end of the 1990s, and between 2001 and 2015, there have been more than 5,900 tax law changes to the Internal Revenue Code. That's an average of more than one a day, friends. And in 2008, there were over 500 code sections changed that year alone. This says nothing. Now, this massive tax law change plan says nothing of the temporary tax laws that are passed, the expiring laws, the retroactive laws, the phase-ins, the phase-outs. All of this stuff has been going on for a long period of time. And what this does is it leads to massive confusion and massive complexity. And we've got a situation now where the tax code, according to the National Taxpayer Advocate, is hideously complex. It's not just complex, it's hideously complex. In 1992, then IRS Commissioner Shirley Peterson made a comment when she was talking about tax compliance. And of course, there was a problem with tax compliance because at that time it was estimated that the tax gap was about $94 billion. And this panicked Congress. We've got all this money out there that's not being collected. What's going on? And of course, they attributed all of this tax gap to tax cheating. In fact, Shirley Peterson put her finger on what most of it is. She said, much of what we call noncompliance is really not noncompliance at all. It's misunderstanding. It's misunderstanding because the tax code is so complicated. Well, she made that statement in 1992. Imagine the context in which it would be in today with all of these tax laws that have gone on. We're to the point now in 2016 where the National Taxpayer Advocate estimated that the tax code consists of about 4 million words, and she said it's impossible to obey and it presents daunting challenges to the Internal Revenue Service in terms of administering it. She has identified tax law complexity as the #1 most serious problem that taxpayers face, and she's done that in just about every single one of her reports to Congress that she's required by law to submit. Since the IRS Restructuring Act was passed in 1998, one of the things that Congress required was the National Taxpayer Advocate to report to Congress what the problems are that taxpayers are suffering, why they're suffering these problems, what we can do to fix them. And she ranked tax law complexity as the #1 problem. Probably if she's submitted 16 reports, she's probably ranked at #1 in about probably 13 or 14 of them. So it's right there at the top and has been regularly. And as a matter of fact, in that same Restructuring Act in 1998, Congress also required the Internal Revenue Service to submit a report to Congress on tax law complexity. And the IRS was supposed to specifically analyze the tax code on a year-by-year basis, report to Congress the sources of complexity, the problems created by this complexity, and recommend solutions to simplify it. IRS is supposed to submit this report every single year since 1998. They've submitted 2 of them, and they haven't submitted one since 2002. I guess it's too complicated to write the report. They can't figure it out. So my #1 challenge for President Trump and his team is not tax reform. My #1 challenge for President Trump is to stop tinkering with the tax code. We have got to stop tinkering with this tax code, and we have to start repealing. That's what has to happen, friends. We've got to start repealing. Now, the Trump plan as it's written right now and as it was presented holds out some hope for this, because there's 3 specific provisions of the plan that would in fact repeal areas of the tax code that need to be repealed. The first one is the alternative minimum tax. A lot of people don't understand what the alternative minimum tax is, and they don't know until they get blindsided by it. The alternative minimum tax is a secondary tax system that runs side by side alongside our regular tax system. And what happens is if you don't pay enough taxes, if in the calculation of your tax liability, taking into consideration all the deductions, exemptions, credits, and so on that you're entitled to, if your tax liability is reduced below a certain level based on your income, then the alternative minimum tax kicks in. In other words, Congress says, if you follow all the rules that we've created and put in the law, and in following those rules you don't owe enough money, then we're going to hit you with a different tax system. And so that's exactly what happens. The alternative minimum tax runs side by side with the current tax system, and so people generally have to figure their tax liability under 2 different systems. If your liability is not high enough under the first system, then the second system kicks in with a whole different set of rules, whole different set of forms, whole different set of procedures, and now you've got to calculate your tax liability under that system, and then you get to pay the highest of the 2. That's the alternative minimum tax. My response is very simple. If we had a tax system that was structurally sound in the first place, why would we need a second tax system? Structure the tax system correctly to begin with, and we don't need an alternative minimum tax. So repeal the alternative minimum tax. And in fact, the National Taxpayer Advocate has called on Congress to repeal the AMT in just about every one of her reports since 1999, 2000, when they started writing them. She's called for the repeal of this. So it's good that this is on the table. The other thing that the Trump plan calls for is a repeal of the estate and gift tax. Now, there was a temporary provision with the Bush tax law in 2001 or 2003, I forget which one it was, that repealed the estate and gift tax as long as you died in 2010. If you died in 2010, you were good. So, people do a lot of preparation for life, but it's hard to prepare for death in that 12-month period of time. But of course, like everything under the Bush tax laws, for those two particular provisions, they were phased out. It was phased out. And so now we're back to the estate and gift tax. The thing about the estate and gift tax, friends, is it's fiscally insignificant. in terms of raising revenue for the federal government, it is insignificant. And it's insignificant because less than 0.5% of all federal revenue comes from the estate and gift tax. On the other hand, of all the estate and gift tax returns that are filed in a given year, almost 60% of them are audited. Now that audit rate is remarkably higher than the audit rate for any other category of taxpayer, including big-time corporations and hotshot rich people. The IRS descends on these estates like vultures and picks the bones clean every time you've got a death of somebody that falls into this estate and gift tax. But the thing that's most repulsive about it, in my opinion, is the premise of the estate and gift tax in the first place. And the premise of the estate and gift tax is that you don't get to pass on to your heirs the property that you earned lawfully and peacefully over the course of your lifetime. You don't get to pass on to your heirs what's left of your estate after you've paid all the taxes for all those years going forward. You've paid your income tax. You paid your real estate taxes. You paid your sales taxes. You paid all of these various taxes, Social Security, just go down the list. You've paid all of those things, and what you have left constitutes your estate, and now you can't pass it on because some fat cat politician has decided that it's somehow improper for your heirs to benefit from your parsimony or your creativity or whatever it is that led to the creation of that estate. That, to me, friends, is immoral. And so what we've got here is a proposed repeal of the estate and gift tax, which I think is a good thing. The third thing on the repeal list is the 3.8% capital gains surtax. The 3.8% capital gains surtax was put into the law as a result of Obamacare, and it was one of those provisions that was going to pay for free health care. Of course, if you had free health care, why would you need to pay for it? But apparently they had to pay for it, and this was one way to do it. And so they've added this surtax to capital gains transactions. And friends, there's a basic economic principle that we need to wrap our arms around. I'm sure most of the people in this room understand this principle. Many of the people in Washington, they might understand it deep inside their hearts, but they certainly don't pay any attention to it. And that economic principle is what you tax, you get less of, and what you subsidize, you get more of. And so they want to raise revenue through taxing, through capital gains taxes. Well, the way you do that is you have transactions that are subject to capital gain. That means somebody has to sell a piece of property that has appreciated over time in order for there to be a gain that's taxable. If you don't sell the property, you haven't realized the gain, and so consequently there's no tax. Now here's what the know-it-alls in Washington don't seem to understand. When you have high capital gains tax rates, people don't sell their appreciated property. And economists call this a lock-in factor. What happens is these assets, or the money in these assets, gets locked into an asset that the owner doesn't want to sell simply because he doesn't want to pay the tax. And so the numbers bear out over and over again that you raise more revenue through lower tax rates because that doesn't discourage the economic activity that you're trying to tax. And so this is a good thing as far as the repeal of the capital gains surtax. Now there's some other positive elements to this law as well that I want to go through a little bit here rather quickly. First of all, the income tax brackets that we have in our system right now, there's actually 7 brackets that range from the 10% bracket all the way up to 39.5%. Those would be collapsed to just 3. So we'd have 3 brackets that would range from 35% on the high side to the 10% on the low side. Now, that's the good news. The bad news is that the plan would also eliminate virtually all of the standard deductions that are claimed. And by standard deductions, I'm talking about the Schedule A deductions, which include medical expenses, mortgage interest, charitable contributions, real estate taxes, state and local income taxes, miscellaneous expenses, those kinds of things. The plan would repeal those except for 2 things. Except for 2 things. Don't panic, Diane. Except for 2 things, and those 2 things, those two things would be mortgage interest and charitable contributions. Those would be left intact under the plan. Okay. And so we have that. Now, as far as the corporate tax is concerned, this is another very positive proposal, in my opinion. The corporate rate under the Trump plan would drop from its current level of 35%, which happens to be the highest corporate tax rate in the industrialized world, by the way. What you tax, you get less of. right? And so this is the highest tax rate in the industrialized world, would drop to 15%. A lot of people bristle at the idea of reducing the taxes on corporations. These big, bad, evil corporations should pay taxes. How can we let these big, bad, evil corporations get away with paying taxes? Well, I got news for you, friends. Corporations don't pay taxes. People do. People pay taxes. And in fact, when you tax a corporation, what happens is you're taxing people in that function in three different classes. Either the owners of the corporation, the shareholders, pay the tax in the form of reduced profits, reduced return on investment, which in turn discourages investment, right? Or the employees pay the tax in the form of lower wages, lower benefits, or fewer workers working for a given company. Or customers pay the tax in the form of higher prices for goods or services. Now, generally, it's a combination of all three. But what happens is the corporation doesn't pay. The owners pay, the employees pay, or the customers pay. And so, in my opinion, dropping it from 35% to 15% is not enough. I would reduce it to zero, because corporations don't pay taxes to begin with. All right, now, on the other hand, this would be applicable to all businesses, so it doesn't make any difference what size of business you have. The 15% rate would apply. And the other very positive aspect of the Trump plan, insofar as business is concerned, is it would allow full deductibility for all capital investments. As it is right now, capital investments have to be treated in a couple of different ways. Most commonly, it has to be depreciated. So if a company spends, let's say, $500,000 on tools and equipment or infrastructure, that sort of thing, they have to depreciate that over time, whereas this plan would allow an immediate deduction of all capital costs in exchange for giving up a deduction on their interest expense, which in my opinion would be a good thing. Now, there's a third element to this thing that I want to talk about very quickly, and I want to move on to really what I think the bigger problem is, the bigger challenge for the Trump administration than just tinkering with these numbers, because as I've said, we've seen tinkering thousands of times over the years, to what avail. The third thing is the company deduction for child care investment. The Trump plan would allow up to $500,000 of investment by a company in child care facilities on site that they could write off over 5 years as the law is presently written. The deduction is only $150,000. It has to be spread over 10 years. So this would be a significant improvement for families with children that have to work to be able to bring those kids to a safe environment in the workplace, managed by the company, managed by the people you work with. That would be a huge step forward, in my opinion, in terms of helping families with child care costs, which are astronomical. So that's kind of a thumbnail sketch of the Trump plan. I really don't want to spend any more time on the numbers and the details here, because all of this stuff is going to change. We're all savvy people in this room as far as legislation is concerned. We know that this is the first volley out of the cannon, as it were, and this is going to go back and forth, and who knows what's going to come out the other end. So it really doesn't make a lot of sense for us to tilt at windmills here as to what this dollar amount is going to be and what this dollar amount is not going to be. But I want to talk about a significant hurdle to getting any plan passed. There's a significant hurdle that Trump faces in getting any tax plan passed, and that is the Democrats are insisting, and they're already saying it, you already see it in the news, they're insisting on a revenue-neutral tax plan. Now, Trump promised a tax cut, but the Democrats are telling us, oh, no, we got to have a revenue-neutral plan. We got to have something revenue-neutral, meaning simply that you continue to collect the same amount of taxes under whatever changes you make that you're currently collecting now. Well, friends, a revenue-neutral tax plan is not a tax cut. How can it be a tax cut? All it does is shift the burden. It might lower the taxes for one group of citizens over here, but it must necessarily raise the taxes for another group of citizens on this side. So it's not a tax cut. By definition, it cannot be a tax cut. And my question to these people, you always hear them say, well, how are we going to pay for these tax cuts? As if the federal government owns your money and somehow you've got to replace their money that they lose when they let you keep some of their money. That's the thinking. This is the point we've reached in the tax debate in the United States. The federal government believes they own all your money. If there's going to be some allowance for you to keep just a little more, that has to be, quote unquote, paid for someplace else. Well, friends, that's a farce. It's an absolute farce. My question is this: why can't we pay for tax cuts by cutting spending here or there? What if, I know this is insane, but what if, because we're just talking here, nobody's watching, what if we just cut 3% out of the federal budget? What if we did that? We're talking about $3.5 trillion. You telling me we can't find 3 cents out of a dollar in that budget to shave someplace? Of course we can. You know it, and I know it. But they aren't going to cut spending because why? They think they own all the money. That's the core of the problem. The left believes it owns all of the money. And what they allow you to keep is through their grace and their graciousness and their kindness. Now here's a bigger problem in my opinion. And this might be the biggest problem. And that is the Trump plan, and nobody has discussed this. And when I say nobody, I mean there's not one person out there, not one talking head anywhere, not any legislator, not any congressman, not any senator, not anybody in the Treasury Department. Nobody has addressed this issue. And the reason nobody's addressed this issue is because there isn't anybody in any of these ivory towers any place that does all this fancy thinking that understands what the consequences of their policies are on Jane and Joe American in the streets. And I understand the consequences because I've been a tax litigation specialist for 35 years. I deal with people who are struggling to comply with the tax laws. I deal with people that are suffering because they can't pay the taxes they owe. I deal with people who as a result of no fault of their own, find themselves in trouble with the IRS for one reason or another. And I got news for you, folks. These people aren't tax cheaters. You know, these talking heads in Washington and these people in their ivory towers will say, well, they're just cheating on their taxes. No, people don't wake up one day. People don't wake up in the morning and say to themselves, how can I tick off the IRS today? Oh, I know, I'll just stop paying my taxes. That'll fix them. That'll teach them a lesson. People don't do that, friends. People move heaven and earth. They screw themselves into the ground to try to comply with the tax code. But because we've got 4 million words that have been changed regularly since 2001, compliance is almost impossible. In fact, the National Taxpayer Advocate pointed out specifically in one of her reports that compliance with the code is almost impossible. And this is the reason we have problems. And this is the reason, by the way, I wrote the book, How to Get Tax Amnesty, which deals specifically with folks who are having problems with the Internal Revenue Service and walks you step by step through the process of dealing with those problems. But here's what I'm talking about. This is specifically what I want to get to as far as the Trump plan and its failures. The Trump plan does not address the IRS in crisis. We've got an Internal Revenue Service that's in crisis. Now, friends, I do not defend the IRS. It's not my job to defend them. All right? The IRS has been whining about budget cuts over the last 4 or 5 years because of sequestration, and they've dropped this percentage and they've dropped that percentage. As far as I'm concerned, their budget should be cut to zero. Because as far as I'm concerned, we should have a completely different tax system. But the fact of the matter is, in the meantime, people are bleeding from the ears as a result of the burdens of this tax system, and they're not getting help from the IRS to get through it. And that's got to be the IRS's first responsibility, in my opinion, is to help honest taxpayers comply. You know, historically, the Internal Revenue Service has churned out a plan they call their 5-year strategic plan, and every 5 years they issue a new plan, no different than any other business. And this plan has always struck a balance between helping taxpayers on the one hand, taxpayer assistance on the one hand, services to help people comply, and then tax law enforcement on the other hand. Because let's face it, there's got to be some enforcement for people who will not do what they're supposed to do. We're not children here. There are people out there who will not comply. So there has to be an enforcement machine. We all understand that. And so you got this friction between these two conflicting goals. Taxpayer assistance for those who will comply, enforcement for those who won't. Now, Doug Shulman was the IRS commissioner under President Bush. And he made the statement that education or compliance, assistance versus enforcement, is not an either-or proposition. He said we have to do both. The IRS's responsibility is to help people on the one hand who want to comply and exercise suitable enforcement on the other hand for those who don't. And that makes plenty of sense. Contrast that with Margaret Richardson's attitude. Margaret Richardson was the IRS commissioner under Bill Clinton. And Margaret Richardson said, and this is a quote now, when faced with a choice between enforcement and taxpayer services, enforcement will win every time. So in other words, her attitude is we'd rather grind people into a powder when they don't comply as opposed to helping them to comply in the first place. And this is the conflict that we have. And we've reached a point now over the last 5 or 6 years where the IRS does nothing but pay lip service to taxpayer assistance, and they're not doing anything about helping people. I want to give you 3 quick examples here of where this is happening. It's happening in the area of phone calls, personal visits by taxpayers to IRS offices, and letters by taxpayers to the IRS. Every single year, talk about phone calls first. Every single year the IRS gets 100 million phone calls. You want one reason why we have to abolish the income tax and go to something simple like a national retail sales tax? How about 100 million phone calls to the IRS every year? We've got 100 million phone calls to the IRS every single year. And according to the 2015 report of the National Taxpayer Advocate, those people that are calling the Internal Revenue Service to set up payment terms on delinquent tax liabilities cannot get through to the IRS 2/3 of the time. All right, now I want to read a quote to you from the National Taxpayer Advocate that puts her finger right on the seriousness, the level of seriousness of this particular aspect of the problem. Only 37% of the people who are trying to pay their taxes could get somebody on the phone to help them pay their taxes. She says, 2/3 of these calls went unanswered. Now, these are taxpayers who owe the federal government money. They're calling to pay their taxes. And the IRS isn't able to pick up the phone and talk to them. This, friends, is bizarre. Now, let's talk about another category of callers. These are people that are trying to find out what happened to their refunds. These are millions of people who don't owe the IRS a penny. The IRS owes them money. I want to know what happened to my refund. Only 24%, less than 25% of those people could get through to the IRS. And here's what the Taxpayer Advocate says about these folks. All of these are legitimate taxpayers desperately attempting to free up their refunds. Yet at one point during the filing season, the level of service of the taxpayer of the helpline was below 10%, 3 consecutive weeks, meaning more than 90% of the calls were not answered. At another point, the wait time was 60 minutes. By the end of the fiscal year, the service levels were somewhat improved, but still abysmal at 24.6% and a 30-minute wait time. These are folks trying to get help from the Internal Revenue Service about their particular problem. The Taxpayer Advocate raises a very legitimate question when she lays out the problems with this level of service. And let's think about this question that she asks here. She says, how do these taxpayers feel when their first contact they actually have with the IRS is a lien filing or a levy on their wages? How will they behave with respect to their tax obligations in the future? What message is the IRS sending when it doesn't engage with the taxpayer and then takes enforcement action? These are not theoretical questions. They go to the heart of the relationship the taxpayer has with the government as represented by the IRS, and they have everything to do with the degree to which a taxpayer is willing to comply with the tax laws. Friends, this is a problem that is going unanswered. The Trump plan doesn't address it, and in all fairness, no plan prior to the Trump plan has addressed it. We've got to get our arms around this thing, and we've got to understand that tinkering with the tax code is not going to be a solution to the problem. Let's talk about visits to the IRS for just a second. Every year there are 5 million people that want to walk into an IRS office someplace and get help with a tax question. Help filing a form, help filling out a form, help with this or that. IRS's response in the last 6 years, they've closed almost 300 walk-in centers, and they've made a decision not to answer tax law questions during tax filing season. Well, my question is, when else does a person need help with a tax law question? All right, and then let's finish up with letters. 10 million letters to the IRS. There are 10 million letters that go into the IRS annually questioning adjustments. Now, this is not all the letters. These are just letters questioning adjustments to the tax liability. Dear Mr. and Mrs. Smith, we looked at your tax return for the year 2014 and we found a mistake, but don't worry, we fixed it. Now you owe us $3,750. Please send a check. People get on the phone. What do you mean $3,750? What mistake? What did you fix? I don't understand this. According to Commissioner Kuskinen, in his April 2016 testimony to Yaboo, Commissioner Kuskinen, Jeffords, what's his name here? I got it right here. Just give me a second here now. You're getting me off my game here, but that's okay. I got stuff here. I got papers here. Okay, so Congressman Chaffetz wrote a letter to the president dated April the 6th calling for the impeachment of Kuskinen. Of course, there was some impeachment proceedings that started here a year ago. They didn't go anywhere. It was anyway, never mind. Okay, so let me get back on point here. So the point is that we've got 10 million letters that are questioning these adjustments, and Kuskinen's testimony in April of 2016 before the House Ways and Means Committee tried to explain to Congress what was going on with these letters. He says there's a backlog of 1 million letters that are in the response queue. A backlog of 1 million letters. There's a 45-day response period that the IRS by law is supposed to address these letters, and they're backlogged more than twice that long. 1/3 of these letters, 1/3 of the 10 million letters is overage, longer than 45 days. So friends, this is a huge problem. This is a huge problem, and it's not getting any better. Under the 2017 IRS budget, compliance and taxpayer assistance and taxpayer education continues to starve. The operating budget for the Internal Revenue Service 2017 was almost $13 billion, was just over $12 billion, $12.2 billion and some change. You know, what's a couple $100 million among friends, right? 42% of the budget is directed at enforcement. 42%. It's a 7.2% increase in enforcement activities under that budget. Compare that with taxpayer assistance. Only less than 20% of the budget is directed to taxpayer assistance. That's $2.4 billion, and that's an increase of only 3.13%. So enforcement gets twice the money in terms of an increase that taxpayer education gets. Now I know what you're thinking. Well, we got to enforce the laws. If we don't enforce the laws, people are going to run wild. It's going to be like the tax equivalent of the Wild West. Here's the dirty little secret, friends. And this is what we got to understand. This is what these policymakers have to understand. 98% of every dollar paid into the Internal Revenue into the IRS is paid in quote unquote voluntarily. 98%. Now, when I say voluntary, I don't mean that people wake up one day and say, "How much can I send the government today?" All right? I'm talking about Vito Corleone voluntary. Either your brains or your signature will be on the contract, right? That's what they mean by voluntary. But what I'm saying is that people comply with the law. 98% of every dollar paid to the IRS is paid through a voluntary process where people write the check. They might hold their nose and write the check, but they write the check, is what I'm saying. 2% of the federal government revenue is collected through enforcement action. 2%. In 2015, the federal government collected $3.3 trillion. Net of refunds, they ended up with $2.8 trillion, friends. 98% paid voluntarily. If you increase enforcement revenue by 10%, you're going to collect $5.4 billion. You increase, quote unquote, voluntary payments by 10%, you get $280 billion. What's a bigger number? For those of you who went to public school, the bigger number is $2.8 billion. The IRS is not concentrating on helping folks. They're not concentrating on taxpayer assistance or education at every level. The IRS is simply ignoring the benefits of educated taxpayers functioning in a cooperative environment. The National Taxpayer Advocate tied a can to this as well, and I want to share this with you. I don't like reading long quotes here, but this thing just hits the nail right on the head, and it's worth exploring. She says, when we talk about taxpayers' willingness to comply, we really have to consider the relationship between the taxpayer and the government. This essentially involves an analysis of the dynamics between power and trust. Specifically, the government, by extension the tax agency, holds the awesome power of the state. For the tax system to work, the taxpayer has to trust that the government will use its power wisely and legitimately. If it does, taxpayers will be more willing to comply with the tax laws and meet their obligations. But that's not what the IRS is doing. They're not helping these people comply. The IRS would rather grind you into a powder when you don't comply than teach you what the rules are so you can comply. Friends, education is consistent with the constitutional premise of due process of law. We all have the right to know what the law requires of us, and we all have the right to prior notice so we can comply before any penalties are imposed. It's an essential element of taxpayers' rights. One of the things that happened in the last 2 years is Congress codified a 10-plank taxpayers' rights statement. It's found now in Code Section 7803, not that we need to worry about the code sections, but you guys out there that are going to research this, Code Section 7803 has got the 10 planks now of what we call the Taxpayers' Bill of Rights. And the central theme of these Bill of Rights is that people have a right to know what the heck the law requires of them. They've got the right to be informed, the right to quality service, the right to pay no more than the correct tax, the right to challenge the IRS and be heard, the right to appeal a decision, the right to finality and privacy and confidentiality, and the right to representation, and the crowning jewel is the right to a fair and just tax system. How can we exercise any of those rights when we don't know what the tax laws are, Congress is changing them consistently, and the IRS won't lift a finger to help us? How can you do it? The answer is you can't. My question to the Trump administration and anybody else who gives a rip about tax policy is, do taxpayers' rights mean anything or don't they? Trump has got to push and insist upon this education element, the outreach element to taxpayers, the assistance to taxpayers as complexity grows. One of two things has to happen, and I'll conclude with this challenge. One of two things has to happen. One of two things. We either need a massive investment in education, outreach, taxpayer assistance, or we got to bulldoze the tax code and start over again. I say we bulldoze the tax code. The end. Thanks. Thank you.
That's great. Thank you, Hurricane Dan. That was very enjoyable.
You give me another glass of wine and I'll tell you what I really think.
Order it up. I think that would be entertaining. All right, so anyone watching online, I have the chat room for the YouTube live stream here on my phone, so if you leave a comment there, I will read it over the stream. And if you have a question here in the audience for our fantastic speaker, please raise your hand. Keely will come over with a microphone, and she already has a volunteer. We'll start with Jim Johnston right back there.
Okay, I'm really glad that you came and talked with us.
Thank you. I'm glad you're here.
And in its subtle, subdued way, you know, it's really remarkable that you control yourself so
I do.
effectively. I observe as an economist, I'm a recovering economist. And I observe that if you reduce the rates, you simultaneously reduce the complexity and the enforcement cost. And so I'm nominating a KISS solution. KISS is keep it simple, stupid. And the KISS solution is reduce the rates first rather than trying to attract complexity, realizing that there are a whole bunch of people that are on the side of complexity, not the least of which are the tax advisors, TurboTax, and all the rest of them.
Well, and I don't fundamentally disagree with that. When you do reduce the rates, you certainly ease compliance. There's no doubt about that. But what steps do you have to take to get to the bottom line of what we call taxable income? And I don't care if you have one rate. You can have one rate, but if there's 700 steps you have to perform to get to that rate, you haven't solved. Now, if the rate's zero, of course, that's different. But you still have to get there. In other words, we've got a calculation that we call gross income, and then we got a calculation that we call deductions, and we got to call adjusted gross income, and then taxable income. We've got all of these various intermediate steps on the ladder to get to the bottom line number of your tax return, which is taxable income. And until we start to dismantle all those intermediate steps, simply reducing the rate doesn't simplify the tax code. It simplifies compliance in the sense that it's easier to pay a tax at 5% than 50%. But the process of getting there potentially remains very complicated.
I've noticed, and you've augmented several times, there are so many pages, and you use the word 4 million words.
Right.
To me, that's a sign of corruption, because there must be a lot of special deals mixed into those 4 million words that affect particular people or corporations, and I think eliminating, and that's what you're saying, to throw away the whole system and start fresh, having a few words covering everything.
Well, and I couldn't agree more. I mean, as far as the corruption is concerned, and the reason we got, look, people have asked me 100 times, why is the tax code so complicated? The reason the tax code is so complicated is because we've gotten away from the number one purpose of the tax laws. Article 1, Section 8 of the Constitution gives the federal government, gives Congress the authority to collect taxes for very limited purposes, to pay the debts of the nation, to provide for national defense, and for general welfare. General read applying to everybody, not specific gifts for certain people or classes of people. General meant meaning applying everywhere. I talk about this in the 10 Principles paper. I talk about it at length in the 10 Principles paper. We've gotten away from that, and now the tax code is used for other things besides that. One of the key things that the tax code is used for, and I think one of the key reasons for complexity, is the tax code is used to achieve somebody's definition of social justice. Well, how do you define social justice? The definition changes every 2 years at least, and certainly every 4 years it changes, or it seems to change. And so we're going to use these tax codes to punish certain behavior that we find abhorrent, and to reward certain other behavior that we find beneficial. Well, when that changes, when those definitions change on a regular basis, what you end up with is 5,900 code changes since 2001, and a tax code that's 4 million words in length. The other thing that Congress does with the tax laws is they buy and sell legislative favors with them. It is just like a congressional currency, and that's what's going on. So we got to eliminate that stuff from the tax code, and the tax law has to be for one purpose and one purpose only: raise revenue to fund the legitimate functions of government, period.
All right. Thanks. Please raise your hand if you have a question. I'm going to go with one right here. Part of President Trump's tax plan proposal is, who knows if it will survive, but the idea is that to give a tax holiday for corporations who have money and profits overseas, so-called repatriation of those funds to the United States. What do you think of that plan, and what, if that was to come about, if there was going to be a tax holiday or maybe even permanent, what kind of impact would that have on the economy of the United States and economic growth in general?
Well, just generally speaking, and again, all we can do is talk generally here for the time being. There's estimates of 2.7 trillion, 3 trillion, up to as much as $3 trillion of money that's parked offshore that could come back if the tax environment was favorable enough for companies to bring that money back. When you have that kind of influx in capital into the business environment, you just have that much more capital available to expand your business resources, whether it's infrastructure like a building, or inventory, or tools and equipment, or people, manpower. If we want to have a stable work environment, if we want to have a vibrant economy that's growing jobs on an ongoing basis, businesses have to have access to capital on an ongoing basis. And we're talking about a massive influx of capital that can only be a good thing, in my opinion.
Oh, I'm sorry, hold on. Hold on, sir. We'll go back
Okay,
there.
yeah, I could give you a dozen comments, but I'll stick to one or two. The first thing is, I'm surprised that you didn't mention perhaps the most important part of the tax code, FICA.
Well, it's, I'm surprised I
Yeah.
didn't mention it. In what context? We're,
Okay,
we're
the
talking
context
about
is
the Trump plan here.
Yeah, but if you're discussing the tax system, the tax code, and simplification of the tax code, perhaps under 1/10 of the rules in the tax code apply to FICA. It's so simple. Practically a flat tax.
Well, it is a flat tax.
With
There's
virtually
no question it's a flat
virtually well up to a level.
Right.
With no deductions, to speak of. The other two parts of the tax code are the corporate, which is by far the biggest part, and the individual, which is also pretty complicated. If you look at the various rates, excuse me, FICA is about 15% up to about $120,000, taking the two, both the individual and the corporate contribution.
Right, right.
And most individual taxpayers are in the 25% bracket for the bulk of their taxes. Add those together if there were no deductions, and you get about 40%. It turns out we already have virtually a flat tax of 40% on the marginal dollars for all but the very wealthiest taxpayers and the very bottom taxpayers, so the vast majority. So when people talk about a flat tax being unfair, they ignore the fact that if you look at the entire tax code, we're already pretty close to that. Okay, that's one comment. A second comment is when we talk about deductions and wanting to keep more of, after all, that's your money, and that the government isn't entitled to it. If you look at the purpose and the nature of the deductions, let's take everybody's, I think we can agree, everybody's favorite deduction is the mortgage interest deduction as being, you know, the one great middle class tax entitlement. I would hold that that's actually a terrible deduction because it doesn't encourage people to buy homes, which is its ostensible purpose. It encourages people to be in debt on their homes.
Well, and you could argue that actually increases the cost of homes too, because people always.
You actually could argue that.
Yeah.
And if you want to encourage home ownership, which I favor, because there is no better bulwark against recession and depression than people who have fully paid off homes. If everyone who owned a home owned it outright and didn't owe money on it, you'd hardly ever have people lose their homes when they lose their jobs. Okay, so what I would propose is instead of having a deduction for the money you owe on your home, or the interest you pay on the money you owe for your home, base the deduction as a non-refundable tax credit on the value of your home. If you're a good citizen and you pay off your home, you still get just as big a tax break as the guy who owes millions of dollars. And I'll stop there. I have one more segment.
All right, thanks. Let me just respond to the FICA thing just for a minute. Obviously, we didn't talk about what I would consider to be the holy grail of tax reform, and that is the abolition of the income tax the way it exists. I'd take all 5 taxes that exist, all major taxes that exist at the federal level: the personal and corporate income tax, the estate and gift tax, the unemployment tax, and the Social Security tax, which is FICA. All 5 of those taxes collect 98.5% of all federal revenue. The other couple of points is collected by impost duties and, you know, excise taxes and those types of things, which I would just not tinker with. I'd take all 5 of those taxes and eliminate them, all 5 of them, lock, stock, and barrel. And I'd eliminate the Internal Revenue Service with it and replace the whole mess with one comprehensive national retail sales tax assessed on all consumption goods and services at the retail level, and replace the revenue, not replace the revenue, because we don't want to be revenue neutral, do we? No, we want to reduce the revenue, but if you had to replace the revenue, you certainly could do it with a system like that. That would be remarkably simple. I talk about that in the 10 Principles paper as well. Go ahead.
My comment was about the offshore corporate earnings and that 2.7, 2.8 trillion number. And it grates on me as a corporate tax executive because there isn't 2.8 trillion in cash out there. Many U.S. industrials reinvest their offshore profits to service offshore markets. And in my particular company, we reported 700 million of offshore accumulated earnings in the last year. We had 80 million in offshore cash. A 10% minimum tax on that 700 million would have required us to take on additional debt to pay that bill.
Sure.
And so, you know, the financial press and our politicians just distort that issue endlessly. My other comment would be, as a corporate tax executive, that I pray that they abolish the corporate tax code so that I could get on with a productive endeavor.
Sure. Yep, absolutely. Yep, no question.
Raise your hand if you have another question. I have one here actually that I'll kind of combine with myself, and it plays off of what Ken there was saying. You advocate for a national sales tax, and of course that would put you out of business. You probably have to write a lot fewer books about how to deal with the IRS.
Well, that's exactly right. It's exactly right, and that's really the test of a good idea. is, are you willing to fund it, right? If my plan is adopted as I propose it, I'd be out of a job. And I don't have any other marketable skills, so now what?
I don't know. You're
I'd have to get a job selling shoes or something. I don't know.
I bet you sell a lot of shoes. Somebody mentioned here weather dynamics on our YouTube page. Should we legalize drugs and then tax them?
Should we legalize drugs and tax them? I don't know if we should legalize drugs and tax. I don't know. I'm not a drug legalization guy, but that's a whole different issue. Different issue.
Well, maybe we do some drugs and talk about the IRS,
Well,
and then it's gone.
Give me some
Diane.
more. Give me some more red wine, and we'll talk about that. That's a legal drug, so.
Curious, Dan, I don't know anyone who is as enthusiastic or passionate talking about the IRS and tax issues as you are. How did you come to start doing this? What's your history? How did this all happen?
I got started in this business as a result of problems my father had with the IRS. My father had a small business in St. Paul, Minnesota, my hometown. Had a printing business at the time, and and he got behind on his employment taxes, his FICA taxes, withholding from employees. He got behind. Very, very common problem with small businesses. I see it all the time in my work, where the employers just simply can't pay the taxes they owe in these areas. Well, my dad got into those problems, and in 1974, the IRS padlocked the doors of his shop. They auctioned the equipment off for a couple of cents on the dollar, and then in 1998, they turned their attention to our family home, and they tried to seize and sell it for the back tax liability. And that's when I got involved. It was just strictly a matter of desperation at that point. I came home one day, and my mom was sitting at the table with an envelope in her hand, and she hands me this envelope from the IRS, and she says, "What do you make of this?" And I read this letter, and I say, "Well, it looks like they're going to try to seize the house." And she said, "Well, what do we do about it?" Well, I had no idea what to do. I was just a kid, 19 years old at the time. But what I did is I took the letter. I went over to the law school on the other side of St. Paul. We lived right on the edge of St. Paul. Law school right on the other side of downtown. So I went over there and went into the law library, and I asked the librarian, "Is there such a thing as a tax law or something?" And she says, "Yeah, and there's a row of books on the shelf about as long as this brick wall here." And I start fumbling around in the tax code. I didn't know what I was looking for, but I was just literally fumbling around in the code and stumbled onto an area of the tax law that deals with taxpayers' rights issues and limits the power of the IRS. And I start reading in this particular section of the code, and I didn't get 6 pages into it and discovered that the IRS was proceeding illegally to seize my parents' home. So I did what any 18-year-old would do under the circumstances. I sued the IRS. And this is no kidding. I mean, it sounds ridiculous because it is. So what I did is I just, using the books that I found in the law library, I pasted together a Mickey Mouse lawsuit, and I sued the IRS. And not long after that, 3-4 months after that, I found myself in a federal courtroom in Minneapolis in front of a federal judge. And the IRS had flown an attorney in from the Justice Department, Tax Division in Washington, and flew this guy in to have my case dismissed. And I stood up in front of the judge and I said, "Judge, the law says this," and I read these 2-3 sentences out of the law, and they're trying to seize this property, and they shouldn't be allowed to get it. They shouldn't be allowed to get away with it. And I sat down, and that was about it. It's about all I said. And this attorney stands up and he starts blathering. He's going on for 20 minutes about code sections this and court cases that, and I had no idea what this guy was talking about. And when he was finished, the judge looked at him and pointed at me and said, "He's right." And he slammed the gavel, and I thought, well, this is easy. But the interesting part of the story, the really fascinating part of the story, is in between the time that my dad got in trouble in the first place and they locked his doors, and 4 or 5 years later, I'm in this courtroom in Minneapolis, my dad got involved in the tax protester movement. And this is this tax protester stuff is the people that say the tax laws are voluntary and they violate the Fifth Amendment and you don't have to file the returns and all this business, right? Well, misery loves company. All these people had tax problems. So my dad's tax protester buddies were in the courtroom that day. And there must have been 100 of them in there, and they all had tax problems. And so they saw the judge slam the gavel. By the time I got home to my mother's house, they were lined up at the door. And they said, "Can you help me with my tax problem?" And I said, "Sure, baby, I'm undefeated. Let's go here." and I approached every problem exactly the way I approached my mother's problem, which I just happened to stumble onto. what is and I approached it with two simple questions. What is the IRS doing, and what does the law allow them to do? And I found that the answer to that question was two different things in most of the cases. The IRS was cheating blind half the time, and so we had remarkable success in stopping them. I've been stopping them ever since. So that's that.
Well, hold on. I have a question online, and we'll come to this gentleman right here. This is from Tapster is Ticked.
Tapster is
That's
ticked.
the handle on YouTube. Hello. Is there any income that is not taxable under fundamental law? That's one of his questions. And his second one.
Remember what I said about tax protesters?
Yeah. And his second one, you can take either or none. It's your prerogative. You're our guest. He says IRS Notice 609 identifies their authority as 7601-7613, which all point to Title 27. Why is that?
Well, first of all, the Internal Revenue Code is not in Title 27, it's in Title 26. Title 26 of the United States Code, we colloquially refer to as the Internal Revenue Code. All of the laws of Congress, acts of Congress that are codified into what we call the Internal Revenue Code are in Title 26. There are over 140 different penalty provisions of the Internal Revenue Code, and they're expressed in that section, and that's where the authority of the Internal Revenue Service derives from. So, you know, here's the problem. Most of these people are well-meaning that raise these issues, and they want to argue about the IRS's legal authority, and they can't do this and they can't do that. Here's the reality. The fact of the matter is all of these so-called tax protester arguments have been heard by the courts over and over and over again, and the courts reject them with monotonous regularity. It happens over and over and over again. And I work hard to tie a can to these various arguments to keep people from getting in trouble with the IRS. And I'm telling you, there's not a week that goes by in my office, not a week that goes by that we don't have somebody coming in who has used this argument or this twist or that twist to try to, quote unquote, untax themselves, and they find themselves in serious trouble with the IRS to the point where they're facing wage levies, bank levies, property seizures, and tax liens. The stuff does not work. In fact, in the book, How to Get Tax Amnesty, I've got a chapter in the book that deals specifically with these problems because listen, most of these people, as I said, are very, very well-meaning. They're not out to try to cheat the IRS or break the law necessarily. They think they're complying with the law. They think they're onto something, but the fact is it doesn't work. All right, I also have a report on my website. It's a free report. My website is taxhelponline.com. It's all one word, taxhelponline.com. There's a free report on that website called The Untaxed Promise. The Untaxed Promise. It's free. Download it, read it, for heaven's sakes. Protect yourself from these arguments. And what I've done in this report, and it's very lengthy and very, very well researched, if I say so myself, I address all of the core so-called tax protester arguments in an effort to keep people from falling victim to this stuff, because I'll say it again, it does not work. Next question.
Right here.
First of all, thank you very much for a really terrific performance.
Thank you. I appreciate it.
Yeah, enjoyed that. You know, half the people don't pay any federal income tax.
It's about right,
roughly.
yep.
And in Washington, which I guess now is the richest city in America, you've got a legion of lobbyists. And they're people whose income depends on the complexity in the tax code. Where do you see the political muscle coming from to make the kind of changes that I think we all agree are desirable?
Well, I don't think there's going to be any political muscle that'll make those changes. What's going to happen is, I see, back in the 1990s, early 1990s, I wrote a book called How to Fire the IRS. And that was a book that started the national debate on whether we should abolish the Internal Revenue Service and the income tax and go to an alternative system. And we ended up debating through the 1990s on whether to go to a flat tax or a VAT tax or my proposal, national retail sales tax. We went back and forth. And I used to think in my naivete, Charles, that Congress would come to its senses, recognize the merits of this idea, recognize the failure of this system, and do the right thing for the right reason. Well, what was I smoking? Now, I don't believe for a minute that they're going to do the right thing for the right reason. However, they're going to do the right thing out of desperation eventually. What's going to cause the desperation? What will cause the desperation is when we reach a point where the current tax code is unenforceable. unenforceable, and we are quickly reaching that point where we've got such a complex code that's virtually impossible to administer and to comply with. We've got a growing number of people who can't fulfill the burdens under the system. We've got 20+ million people out there that can't pay the taxes they owe. We've got plus or minus 12 to 15 million people that have just stopped filing tax returns altogether. We've got business after business behind on their employment taxes, that we talked about before. The IRS is not focusing on taxpayer assistance, so these problems are getting worse as far as people who want to comply who can't comply. And so when the thing collapses of its own weight, then Congress is going to have to sit back and figure out a different system. That's when it'll change, in my opinion.
Any more questions from the floor? I have one then to wrap it up. You mentioned IRS Commissioner Koskinen earlier. Should he be impeached?
Well, the evidence
Why?
the evidence is first of all, as to why Koskinen was implicated along with Lois Lerner in the cover up of not just the cover up of, but the overt attack on Christian conservative organizations that were applying for tax exempt status under Code Section 501c4. And it's turned out as a result of a Treasury Inspector General for Tax Administration investigation that I wrote about extensively in my newsletter over the last couple of years. It turned out that the IRS had deliberately targeted organizations that had names like Tea Party in their title, or Patriot, or Christian conservative, any kinds of, there was 6 or 8 different variations of phrases that the IRS had flagged for particularly intensive, above and beyond the requirements of the law and the regulations, particularly intensive scrutiny, to the point where most of these organizations simply were not getting their exempt status, not because they weren't entitled to it, but because there was delay in the process. And Lois Lerner was the assistant commissioner in charge of the exempt organizations division at the time, and she came under congressional investigation to the point where she pled the Fifth Amendment and then resigned as a result of what knowledge she had and role she played in targeting these organizations. And of course that went up to the White House as well. I'm getting too detailed here. Bottom line is, Koskinen, as the Commissioner of the Internal Revenue Service, was testifying before Congress on numerous occasions about records that Congress had subpoenaed in connection with the investigation. Koskinen was sandbagging, and it turns out the Treasury Inspector General was discovering records that the IRS was saying were destroyed, and they were hacking into hard drives that the IRS said were fried, and Koskinen was the point man and all of that stuff. And in answer to your question, yeah, fire the bastard. Why not?
So not impeached, but arrested. That sounds like crimes to me, Dan Pilla.
Yeah, listen, say again?
Does the IRS commissioner serve at the pleasure of the president?
Yes.
So Trump could just fire him?
Yeah, why hasn't he done it already? I don't know.
Maybe it'll be part of the tax plan.
We'll see.
We'll see. Hey, let's give a round of applause for our fantastic speaker tonight, Dan Pilla.
Thanks for coming, everybody. And Diane and Jim, thanks for having me. I appreciate it. I do.
Sure. How many copies of this did you bring with you?
Just the one, but you can get it off my website, taxhelponline.com. That's all one word, taxhelponline.com.
Or you could probably get this one if you have a 20 spot in your pocket, I'm sure. So thank you all for being here this evening. Really appreciate it. We hope you go to heartland.org and check out the events link at the top so you can see what we have coming up. And we hope to see you again. Drive home safely, and good night.
Good night.